June 15th, 2023. This is the S&P 500 E-futures mini on the 2000 tick chart on the NinjaTrader 8 platform. Go down to the descriptions below and you can see where I saw the setups as well as where I took my trades, so you don't have to watch the entire video. Everything's been timestamped. So today was a pretty bullish day. As you can see in the pre-market, prices sold off. Then it looked like it rallied pretty hard, but it rallied in about three distinct legs. There's one leg up, consolidation, another leg up, another consolidation, and then finally a third leg up, which I would kind of describe as two smaller legs inside. Thought I saw at the end of the day two giant measured moves, one big leg up, consolidates, and then I grouped legs 2 and 3 kind of together and made this other giant leg up. And there was a little bit of reaction right at the top where the measured move was. And then toward the end of the day, it just kind of chopped around and sold off just a little bit. As you can see in the aftermarket, it is kind of selling off right now. So there was only one trade that I took today, but there was a few setups that I saw that might have been possible trades. And I'm going to go through it now. For the pre-market, I marked the highs and lows of the pre-market. But as you can see, nothing really came into play at these pre-market highs and lows. The market price actions pretty much just blasted through the highs and it just kept going after that. There was only a couple of pieces of economic data that came out at 5:30 Pacific Standard, which did affect the market. It seems like it was the core retail sales as well as the Empire State Manufacturing Index and the unemployment claims. So all that information came out at around 5:30 Pacific Standard. And as you can see, it happens right about here. So the market was selling off after this kind of super whipsaw previous day. This is yesterday. And so then the market in the pre-market, it kind of sold off. Then around 5:30, when all that news came out, for whatever reason, the market looked like it reacted very positively. So everything was bullish and just kind of started running away. So here we go. Now, I just want to point out that this big orange trend channel is what I ended up with, but throughout the day, it did evolve because it did start off with this smaller, tighter one, and then I also had a different, slightly angled one. I also brought it out to be wider, but this is kind of what I ended up with, and I took my trades off of that. Okay, so right at the open, it gets very choppy. There are second entries in here, but I felt this was too congested, so I didn't want to take a trade. So I did see a trading range right here, but it felt like it was very choppy. It's also in the very first 8 minutes, and you can tell how many candles there are in 8 minutes, definitely more than 8. So if you're on a 1 minute chart, you would see just 8 candles, but here you clearly see there's probably about 16 to about maybe almost 20 candles here. So this is very choppy, so I just kind of stayed out of it. Then I continued rallying up. I placed this trend channel here where I had one touch and then 2 touches. Maybe you can argue for third touch, but definitely it fit very well at the top as a potential resistance. And in here, there was really no entry to take. There are no clean second entries or safe entries to take. On top of that, they're already floating very high from the EMA, so there was no key entry points to take. If you wanted to get on this, you would have had to have taken it down here on kind of a so-so entry, but I didn't want to take that. So I just kind of left it alone and prices just kind of ran away without me. That's okay. The first setup I did see is right about here. It's very subtle, but it's actually the first time prices came back to the EMA. So it is a new high here, a double top, comes down, one leg, you see a first entry, comes up to the top, comes back, makes a second entry. Now, I want to point out this is a possible trade. The signal bar isn't good, but the overall context is good because it's coming potentially for a good bounce because the prices haven't come back to touch the EMA for quite some time. And even when it did, it was right here. The EMA was showing some pretty good strength as support, even in the pre-market. You have to go way, way into the pre-market to see the first time it was actually below, then it broke out above. So this entry I thought was, it's a little scary just because the signal bar is bearish, but it's decent because this next trigger bar, it's showing support, it bounces, but it doesn't bounce radically too far away. So there's still enough chance to get in one tick above the original signal bar. But when I saw this in real time, this is what I see in real time. This candle forms. I was a little indecisive. I wasn't 100% sure just due to inexperience, and I haven't seen enough of these setups, but I do know, and I was tempted to take this trade just because the EMA is coming into play. And usually when prices are floating way above the EMA for so long, and on top of this, you do have a second key entry point, which would be this ascending support line. Usually that's pretty good for a bounce for at least a scalp, but I think I overanalyzed it because I thought, well, I don't know if there's enough room or enough strength to break past this recent double top. But after I looked at it in hindsight and the trade went without me, it was in hindsight a pretty reasonably good trade to have taken. So I skipped it since I wasn't sure, and felt like maybe prices are topping out. I didn't want to think, or I didn't want to be tempted or think that I'm taking the top of the range, take a trade. You don't want to be buying at the high. But it turns out if you did take it one tick above the original signal, it would have filled you. There's plenty of room to your stop, so you would have been safe, and it would have just kept going up and probably giving you your scalp here. You hung on to it, even with a runner, you're still safe, unless you move your runner straight up to break even, and then prices continue chopping up. At this point, I was questioning the validity of this trading channel, this trend channel here. And so I was thinking, okay, maybe there's a different fit. But it started to break through, and I started to place this shortened trend channel coming down. There was a new high here, first entry long, second entry long, and then a failure, but it feels a little congested, and you don't want to be taking a short on a counter trend when the day has been so bullish. Prices continue chopping around. I'm just sitting on my hands at this point because I'm not 100% sure what's happening, and that's okay. Prices are continue chopping. I think is in this larger trading range at this point because I counted this as potentially a double top, even though this one's slightly higher. Comes back down, and I do like this triple confirmation here: one touch, two touch, three touch, and then a fourth touch here. Unfortunately, I didn't see a good clean setup here, even on a larger visual, like a first entry. There's just one big leg coming down. Prices continue moving up. It breaks out. This is a potential breakout, fail breakout. I did see this as a new low, first entry short, second entry short, fail breakout potential. This is a very good signal bar. So this was a tempting trade to take. It was at the top of the trading range, so it could be moving right back down. But again, prices have been showing this super duper strong strength at this point. So I'm just hesitant to just take this short right now. If this had overshot and broke to the underside on the continuous bullish trend, I'm more willing to take the failed breakout there. But this is a counter trend failed breakout trade. Turns out it would have worked out fine. And I'll just chalk it up to more experience. I do see this as a new high. Come all the way down. You make a first entry long here. And technically, this is a hidden second entry long here. It's subtle, but it's there. So it's first new high, first breakup. And here, this is where the second entry long forms. You can see it actually breaks down below and then moves back up. So it's actually first entry long, pulls up, pulls back, and then right here on this one singular candle, it makes a second entry long. It's hidden. Now the signal bar isn't that good, but the trick bar is pretty good and it's bullish. It also engulfs this entire signal bar candle. EMA is also showing that it's starting to hold a little bit. So that is a potential trade. Excuse me. So if I would take this trade, I would have placed it one tick above the original signal bar, which would have been right here. Let's see what would have happened. It would have left me because it never came back down to catch me, but I would have felt more comfortable as opposed to maybe taking one tick above this close. Although one tick above this close isn't the worst thing in the world since the signal or the trigger bar in this case is so strong. It is going into the top of the trading range. And if you did take it one tick above here, you have enough room to scalp out for a point. But seeing this in real time, I didn't process it quickly enough. But I also did see this as a new high, first entry long. Now this is a very clean second entry long, potentially setting up. But there's also a new low here, first entry short, second entry short. And I also consider this as from the second entry long hidden. This I thought when it formed, I thought this is definitely a higher low, and it's a first entry short, second entry short. As soon as it flashed up, I said it's a failure. Prices are going back up. So I jumped on. This is my first trade that I took. It has three things going for it. I like that it was a higher low for this second entry long. It's also a failed second entry short, so I'm going to go long. And it's also a clean second entry long and not the hidden one. So it's first entry long right here, pulls back, makes a second entry long. So while this candle was forming, I jumped on right here and I got a pretty decent fill and moved back. I keep my stop down here, right where the EMA is, and I get my target up here. So I was pretty happy with this trade. I definitely wanted to exit before I hit the tops of this range. And when it pulled back, I was wondering if I was going to get stopped out. But when this candle formed, I knew it was breaking out of this trading range now. Well, I didn't know, but I had a pretty good hunch that it was. So I was able to stick in the trade. Prices continue moving up. At this point, I see this potential trading range could be wider. So I drew this one to touch here, touch here. So it's like 3 touches now. And it still has pretty good 3 touches at the top. So it could be working this wider trading range. Prices continue moving up. I don't see any entries that I like. There is a new high here. First entry long, second entry long right here. There's a very decent signal bar. However, it's a little far from the EMA. It is just made a recent high of day. So I was a little bit reluctant to take this entry here. And then you do get a lower high here. Unfortunately, the lower high, it is making a 4-touch test up here. So if you take this lower high, then you're banking on a move that's even higher. However, this signal bar is a little bit more neutral. If it closed at the high and was kind of a hammer candle, then I would feel more confident taking one tick above it, potentially riding it up, at least for a quick bounce up, because there probably would have been some stop orders or profit. So people with some buys one tick above here thinking it's also going to go long. However, I saw that, didn't process it in time, so unfortunately the trade left without me. Prices continue moving up. It falls within the shortened trend channel, and I'm thinking this is a shortened trend channel within the larger trend channel. It makes a new high. First entry long comes down. This is a second entry long. I don't like the signal bar. It also breaks out of this ascending channel right now. So I'm just thinking, okay, wait for a higher low. And as you can see, this higher low forms right here. I like this higher low because it also, excuse me, I thought this is a pretty decent potential trade right here. It's a confirmation of the second entry long, first entry long, second entry long. Technically, oh, so let me just zoom in. There's a first entry long, second entry long. If you count it strict, then second entry long is still here. It hasn't failed yet. And technically, you could say it's a higher low forming off the bottom. So I like this trade. Unfortunately, I didn't take it because it's also moving right back into the trading range. I think at this point in time, I was actually away from my desk, so I wasn't able to take this trade. And this is actually in hindsight when I came back and found it. And so I did step away for about an hour today, and I wasn't able to trade right around the 8 o'clock to about 9:20 time frame. So this trade would have been a good trade to have taken. I also like that it ticked one tick below, so trapped all these people going short and then moved right back up and engulfed this candle right here. So I like the characteristic of this candle, well, of this setup. And even though there's an overshoot right here, I'm thinking if there's an overshoot, it's going to try to make probably another overshoot on this side. It might have a kind of a big pattern that moves back up. So more and more reason to potentially take this trade. Prices would have continued moving up, so it would have worked out as a pretty decent trade. Pops around. I see a second entry long here. So first entry long, second entry long. Again, I'm not at my desk, so I wasn't able to take this trade at 9:16 Pacific Standard, but it is a good signal bar. Second entry long also on the larger time frame because I can see this is one leg down, push up. There's a second leg down. This is a potential start of a second push up. So it's a second entry long and also on a kind of a global bigger scale. It looks like it's potential second entry long. And I would expect to test the previous highs right up here because it broke out. Maybe it's going to come back and test it again. Looks like it would have worked. And when I also saw this, so I'm back at my desk now, and I'm seeing this kind of widening wedge pattern. It makes me kind of nervous because these candles are getting larger and they're kind of exceeding the extremes on each side. So it looks like it's kind of, going outwards. So I don't know what to make of it, but I do see a double top here. That's kind of where I draw a bigger trading range here. I thought, okay, this might be a potential resistance up here. I wasn't sure where the bottom is, so I stuck it down here. It looked like it was a couple tests. So it's trading within its big trading range. Moves down. I see one potential leg down. Pulls up, and I see a potential second leg down, but I didn't see a clean second entry here. Moves back down. It's respecting the bottom of this trading range, which is good. It kind of indicates to me that the trading range that I drew is valid. And then it breaks out and it starts moving up. So I drew fit this shortened trend channel in here, but I don't see any good second entries. There is a second entry long here, but it doesn't feel and look quite right because there's a new high, first entry long by one tick, which is fine. Technically, it's a first entry long, and then a second entry long also by one tick. However, in this formation, you have a doji Two candles side by side, and then two more dojis. So it's telling me there's indecision here. Indecision means it could go one way or the other, so it's a little bit hard to tell. I need a little bit more of a body to these candles. Prices continue moving up. Comes down, it chops around. I do see this failed second entry short potentially forming. And again, I do see maybe it's a possible trade. Excuse me. This is from here, it's a new low. Even though there's technically a new low here, you can start from here. It's like first entry short, second entry short, and now it fails because it moved one tick above. It's potentially in its trading range though, but it does complete above the EMA. So it failed second entry short above the EMA. It does give you confidence that it could work. However, the EMA is flattening. The signal bar did move back one tick below this. Excuse me. This is a signal bar for the second entry short. It moves one tick down and then flashes one tick back up. So it looks like it traps people that went short. And then if you had one tick above, you would have been stopped out of this candle. So it feels like there might be some more strength to move back up into the bullish side. But this is a little bit hard for me to see all this in real time. And I also saw on this form, it flashes back down and flashes back up. When I saw that, I knew the trade probably was a failed second entry short. However, it took me a little bit less, well, it took me a little bit too long to kind of discover this in real time. So unfortunately, the trade left without me. The prices continue moving up. Kind of keeps chopping up. I draw the second, well, not a second, but draw the shortened trend channel here. Looks like it's containing prices pretty well. Unfortunately, there's no clean entries. Technically, it's right here. You have first entry long. You don't have a second entry because it actually exceeds the recent high. Prices continue moving up, makes a new high. You see a first entry long, comes down. You technically have a second entry long here. This is a decent signal bar, but I just, for whatever reason, didn't like that it was so close to the EMA, and it just recently broke out of this trading range. Not trading range, but trend channel. So it has an overshoot. It could come back down. So I do know when it has an overshoot like this, I'm a little more hesitant to take an entry in the same direction as where the overshoot went. So since it broke out bullish, I'm reluctant to take another bullish trade here because typically when there's an overshoot, prices want to move all the way back to the other side of the channel. So you don't necessarily want to take an entry, second entry on a long, in this case, too early because you might get stopped out. And that's exactly what would have happened. If I took my entry one tick above here, it would have gotten filled and immediately flashed down. And it probably would have stopped me out on this candle, if not definitely this candle. And if not, definitely one of these candles if I kept it tight. This is one leg down, it pulls up, tries to reach the other side, but it pulls back down and it breaks through. So I do see a new high here, first entry long, second entry long, and it's second entry long failure. Now I also thought this is a pretty decent trade right here. This is technically where the signal bar is. The signal bar is bullish, but it did form below the EMA, so it is a decent trade to have taken. There's enough room if you had one tick below to move all the way back down to the recent lows. So there's enough for at least a quick scalp. And excuse me, I had to get some water. So there's first entry long, second entry long failure. As I said, it's like it is probably going to overshoot about this much from this. So it's one leg down, push up, and it's making the second leg down. I drew this measure move, this green line here. So I would think it probably would come back down to maybe test this, make an equal overshoot on the bottom side. But thought this was a possible trade. But it was also getting a little bit late in the day. I mean, there's still about 30, 38 minutes left, but I didn't want to take that trade. I just didn't feel quite confident enough because it was getting close to the lows, even though there was enough room for a scalp. Prices continue chopping. I do see a second entry short here. It's very, very close though. So this is new low, first entry short, second entry short. Now this, unfortunately, is forming with only 18 minutes left in the day. But if this had set up a little bit earlier in the day, this is, in context-wise, relatively good because it looks like prices are coming back down. This is a very decent signal bar to go short on because it's like All the bulls pushed it up, then immediately the bears smashed it right back down. It closed really close to actually below where it opened. It's also showing that EMA is kind of pushing prices back down. Also, you see this solid blue line is showing this is the measured move that I drew earlier in the day. When this moved up and it was consolidating, I thought this is potentially one big leg on a larger time frame. And I stuck the start of the second leg down here. So this is kind of one big leg on the second. And I thought the end of the measure move would be this blue line. So this kind of, I just drew it out. And as you can see, prices kind of danced and bounced above it for a little while, but then they broke back down below. And so when I came back up here, it didn't quite hit this measured move and it came back down. I thought this trade, again, context-wise, might have been worthwhile, but unfortunately it's too close to the end of the day. I didn't want to take it and potentially be stuck or take a loss on my only single win. I didn't want to get profits back. As you can see, it would have worked. Not guaranteed to work, but it seemed like it was on the probability side of probability might have worked a little bit more than it would not have worked. Then prices were chopping when this trading range moves up and then it kind of sells off. And as you can see, this is the last 10 minutes, and you can tell in the last 10 minutes, there are easily about 30, almost 40 candles in this tick chart. So there's a lot of price action, but it is very whippy. I tend to not want to trade this because something unexpected could happen. And also, a lot of traders are closing out their positions that they might have taken a swing early in the day. So it's a little bit harder to know what will exactly happen, and even high probability trades could fail here. The I guess the small chance the high probability trade doesn't work out could come into play here, and also might come into play at the beginning, first couple of minutes of the day. So typically, unless there's this super remarkably clean, obvious setup in the high, not the high, but of a high probability setup at the beginning of the day, I usually tend to kind of sit out the first few minutes. And it'll be the same thing here at the last 10 minutes of the day. Unless I'm already in a trade and managing a runner, I would tend to not start a new position back here. So how I saw the charts today, I only took one trade, but there were a few trades that I thought were viable trades, but unfortunately for one reason or another, I didn't take them. So hopefully that was helpful.